This is absolutely critical. I want to talk about the auto deduction strategy. And if you're an entrepreneur, this has got to be on your tax return. And I'm not kidding. This is the best year in 40 years for the auto deduction. I'm not kidding. So please watch the first 15 minutes of this broadcast, and I promise it won't be a waste of your time. I'm going to give away a book for those that share this video. I've got an article that I want to email to you that will help enhance this, and we're going to rock and roll. Now, I've also got 3 cameras going here, so if I look a little cross-eyed, it's because I got 2 Facebooks and a YouTube going, and I just want to say thanks to all of you for watching. My name is Mark Kohler. I'm a CPA, I'm an attorney, I'm a small business owner, real estate investor, and I just love the American dream. I love being an entrepreneur. Now, one of your #1 tax write-offs is going to be auto. There's not one of you out there that's even just a passive real estate investor that doesn't need to know this. You have got to be writing off your auto. If you're going to drive somewhere to check on a rental property, you're going to drive somewhere to meet a customer or a client, you're going to be driving to a conference, a meeting, I need you to track your auto expense, and it's going to save you thousands. Okay, now I'm going to do live Q&A. So if you have a question on this, throw it down there. I'm going to take as many questions as I can. Will be 30 minutes max, but I want you to give me 15 minutes because I want to wow you. Now, Chinese culture, this year is the year of the pig. I'm telling you, in the United States, it is the year of the auto. This is insane. So when you go to your auto theory, okay, let's start fresh. You've got a car, you want to write it off. You got a truck, you got an SUV, you got an RV, you got a motorcycle, any of those vehicles. And I'm not talking about travel, that's airfare and hotel and all that. I'm talking about your vehicle that you get around in. You got 2 main options. You've got mileage and you have actual. Now, actual is crazy. It blows up into like 2 or 3 options. So I just want to hit mileage. This year, in 2019, is 58 cents a mile. Now, I just had even 2 phone calls today with clients from around the country, and they said, Mark, how do I track my miles? Is it on 1 vehicle? Is it on all 3? What do I do? Okay, bare minimum, give a fair, honest estimate of your business miles at the end of the year to your accountant. Now, the IRS wants a written record, a written log of your mileage. That's the technical rule. And if the IRS comes knocking, you better have one ready to go. But as an accountant, what I want to see from my client is a realistic estimate of their business miles. Now, this is on all your vehicles. You could be your car, your boyfriend's car, your girlfriend's car, your husband, your wife, your kids, anybody that's helping you in your business. I want to know miles. So you might have car number 1 is 10,000 miles and car number 2 is 9,000 miles and car number 3, that's the big one, it's got 25,000 miles. Now, this is your total miles during the year used for business. Commuting does not count. So if you're going to your day job, doesn't count. For you Uber drivers, this is driving your Uber. Now, if you are driving for personal, that does not count. Now, charitable and medical are 2 other categories, not going to go there today. But you've got these different numbers. Now, never ever give me a mileage estimate of 10,000 miles. That's going to draw red flags with the IRS every time. I want to see 9,722 and 8,827. Do you know what I'm saying? Come up with a good estimate of what you think you do in your business when it comes to mileage. All right, that's option 1. Now, again, if you've got a question, I want you to bring it up. I'm going to show you how to win this book. Today, we're going to give it away. And also, I've got an article, and I'll tell you how to email me to get that article for free as well. Now, this is mileage. You want to do this on your RV, your motorcycle, your car, and blah, blah, blah. Now, let me give you a quick example. Dylan, throw me that calculator right in front of my computer. Now, this is really cool. This is going to be fun. We're going to throw this down. Now, if any of you are willing to admit that you drive a Prius, I know it's embarrassing, but you're getting great gas mileage. I get it. If you're willing to say it, let's run some numbers here. Let's say you're getting 40 miles to the gallon in your Prius. I know you deserve it because you're driving around in that dorky car. Now, I'm just giving you crap because I drove the electric Nissan Leaf. I got sick of getting beat up at truck stops, so I had to upgrade. But the point is, you could be doing a Prius at 40 miles to the gallon, right? Pretty cool. What's your deduction? I mean, now let's think about this. Let's say the average gallon of gas right now in America is $3 a gallon. All right. Well, you'd say, well, I get a write-off for every gallon of gas. No. It's 58 cents a mile. So if you drive your Prius 40 miles on that 1 gallon of gas, let's do the math, 0.58 times $40 equals $23.20. You get a tax deduction of $23.20 for every gallon of gas you put in your Prius. See, this is the crazy part. Motorcycles, they even get a better miles per gallon. So you just have to think of my best fuel economy vehicle sometimes when you go to buy a car. Okay, now, any questions, Nancy? How are we rocking?
We have a big one when you're ready.
Okay, let's hit it. Before we go to actual, so now we're going to break down the actual expenses, but first a question, yes?
Malcolm says, can you please discuss the pros and cons of purchasing, holding a vehicle directly within an entity or personally owning the vehicle?
Live presentations before, you could have an S corporation, you could have an LLC, and down here it could be you. It could be your trust, it could just be you, whatever. So what we want to do is make sure that you put your vehicle, well, let me say it this way. Put your vehicle on your tax return. The tax write-off for your auto does not matter who owns it. So it doesn't matter who owns your vehicle. It matters if you use it for business or not. So what Malcolm's asking is who should own it and where do I get to write it off? If I'm your accountant, I'm going to write it off in your S Corp, I'm going to write it off in your LLC, or a little of both. I do not care. This could be your rental business. This could be your dental business. So you could be doing two different things, and I don't care. This is your online marketing. This is MLM, whatever. This is your rental. So I'm going to take your mileage in both buckets. But what Malcolm says is who should own it. If you own your car and you get into a lawsuit doing business, they're going to sue you personally. This is an asset protection question. And me as a lawyer, not just an accountant, I can answer this for you, Malcolm, and I say that humbly, is most times people, if you own your car outright, I want your S Corp to own it. Because here, if someone sues you, they've got to get through the S Corp to get to you. You get an extra layer of protection. So unless you're driving drunk or you're completely reckless or high or texting and driving, no one can sue you personally unless you were negligent. So going through the S Corp is a really extra layer of asset protection. But again, you don't have to do this to get the write-off. Malcolm, I'm still going to write off your auto in your S Corp even if you own it personally. So that's the easy answer. We get more technical on all that. And all you accountants out there, you know what I'm talking about. Now here's the actual. This is where it gets good. People, if in 2017, just a year and a half ago, if you would have went out and bought a $50,000 car, it would have taken you 16 depreciation, fuel, repairs, maintenance, taxes. In 2017, if I bought a $50,000 car, it would take me literally 16 years to write this thing off. It was a nightmare, literally a nightmare, because there was limits because they didn't want people buying really expensive cars and abusing it. So anyway, this is an opportunity for planning. And under the Tax Cuts and Jobs Act, what they said is the new luxury vehicle is $50,000 or less. So this was a big opportunity. So what it means now in 2018, 2019, this is it, everybody, listen. If you go out right now, this is killer, and you go out and buy a car for under $58,000, in the first year, I could write off $16,000. I could write off $16,000 right out of the gate. Then I can depreciate it, then take fuel repairs and maintenance, and I can write off 75% of this car in the first 3 years. That is huge. So now some of you are thinking, well, should I do actual or should I do mileage? That's a great question. I've got an article that's 4 pages long with 8 different scenarios and which one fits you best. I will email that to you and I'll give you an email address here in a minute. But under this option, now I'm going to do questions here in just a second, car, if you're not going to put on a lot of miles, you're going to want to go actual. My clients in Hawaii, you're not going to put on a lot of miles, you're on a freaking island. So you're going to do actual. But then I've got clients in the Midwest and they're driving everywhere and they're putting on a ton of miles. We're going to go mileage. So see, you've got to look at what's the cost of the car versus what's my actual expense going to be, and get the best result. All right, let's hit some questions. What do you got?
Perfect timing for James's question. He bought a 2018 Nissan Leaf on December 27th because Nissan told him he could write the whole thing off. True or not?
First name?
James.
James said he went out in December of 2018 and bought a Nissan Leaf because the Nissan dealer, this was a car salesman, remember, car salesman, said that he could write off 100% of his Nissan Leaf off. All right. Many of you are probably thinking, okay, car salesman will tell you anything to buy a car. So James, I hope you're sitting down. Here's a few thoughts. First of all, we've got to assume you've got a substantive business where you're making 40, 50 grand a year. I'm not going to write off a freaking Nissan Leaf if you made $3,000 selling Cutco knives on the web. That ain't going to fly. So first of all, you got to have a legit business. Number two, you got to use the Nissan Leaf 100% for business. Now, for many of you out there, you might use your car 70% business, 80% business, 60, 30, I don't care. We'll add up your miles, we'll look at your actual option and go with the best one. But how can I write off 100% of a Nissan Leaf if you barely have a business at all, you're just getting started, and you use it to commute to your day job? So James, we got some concerns. The third issue is the Nissan Leaf, which is cool. Now, this is the good news. Nissan Leaf's an electric vehicle, and there's an electric vehicle tax credit, which is on top of being able to write it off. So James, that's probably where they were trying to sell you, is they were saying, hey, you can write off this whole Leaf. Well, you get a tax credit, and if you have a business, you could write off mileage or actual, and that might help with the tax credit. So James, you got to just run the numbers. If you got a business for 2018, go in and see your accountant. If you need an accountant, we're an accounting firm helping clients nationwide, but you've got to really meet with your accountant to figure out how much of a write-off you're getting to get in 2018. Nancy, another question?
Yes, we have Henrique says, can I write off mileage on my S-Corp or just use actual mileage?
Okay, so Henrique says, I've got an S-Corp. Can I do mileage or do I have to do actual? Guys, this is so important for all of you listening. I don't care if your S-Corp owns it. I don't care if your LLC owns it. I don't care if you own it. The question is, first, are we going to go mileage or actual? If you've been doing mileage in years past, you got to stick with mileage. You only get to choose if you buy a new or used car this year or in 2018. This is your time to decide. So Henrique says, well, I've got my car in my S-Corp. Can I do mileage or do I have to do actual? No, you get to choose. The S-Corp doesn't tell you what to do. So we're going to look at it. Do you have a lot of miles? How much did you pay for it? When did you buy it? And I've got these 8 tests in an article that will help you try to figure out the best way to go. And then I want you to talk to your accountant. Now, let me tell you everybody where to go. If you want to get this blog article that took me hours upon hours to want to email it to you, email me at mark@markjkohler.com. mark@markjkohler.com. And in the subject line, just put vehicle. If you put vehicle in there, my personal assistant, Nancy, we're not that huge of operation. I don't have 10 staff doing this. Poor Nancy, she's going to hate this. She's going to get a bunch of emails tonight. But if you'll email this, we'll send you back a blog article that's 4 to 5 pages long, and I have 8 factors or 8 tests, and you can choose which one's best for your vehicle. Now, we haven't even talked about, guys, it gets better. If you ever watched a ShamWow commercial, let me tell you, it gets better. Okay, so this is crazy. So think about this. First, we're doing mileage or actual. 58 cents a mile is the best ever in the history of America small business tax write-offs. You've never been able to do 58 cents a mile. But if I go to actual, now when I go to actual, let's get over here, I can do a car and buy new or used in 2019, or if I did it in 2018, and I can write off up to $16,000 right off the gate, right out of the gate, depreciate it, write off fuel repairs and maintenance, and 75% of this car in the first 3 years. Now, if the mileage equivalent, I'll just give you spoiler alert, is about 20,000 a year in business miles. So if you're going to be doing less than 20,000 a year in miles, probably going to go actual. If you're going to do 20,000 a year or more in miles and keep the car for 4 or 5 years, then we're going to go actual. So did I say that the other way? If you're going to go less than 20,000 miles, actual. If you're going to do more than that, stick with mileage. That's what I meant to say. It's tricky, right? Okay, next question.
We're jumping to Entrepreneurs page on Facebook. Jericho and Nancy want to know, I was informed by my CPA that ticket violations can be a write-off.
Jericho and Nancy, my personal assistant who gets a speeding ticket about once a month, she drives this cute little Beamer and just thinks that she's invisible to police officers. Guys, everybody here, bad news. Let me tell you, speeding tickets, parking tickets are not a write-off. Now, the toll roads are a write-off. Parking fees are a write-off. Parking garage is a write-off, but violations are not a write-off. Sorry. Okay, now, it gets better. So check this out. If you buy an SUV or a truck, the old rule was, now this is something that weighs 6,000 pounds or more. You've all heard this before. If I buy an SUV or a truck with less than a 6-foot bed and it weighs more than 6,000 lbs, the old rule was, well, you can write off $25,000 right off the top. So if I bought a $50,000 truck or SUV, I could write off 25 grand, and then the rest is depreciation a little bit every year and actual fuel repairs and maintenance. And if a client wasn't going to put on a lot of miles, we'd do this. That would be a good fit. But did I say it gets better? Now under the Tax Cuts and Jobs Act, and I think is a loophole. I don't think Congress and the IRS expected this because they've been trying to not let SUVs and trucks be a write-off because it's bad for the environment. So for all of you environment haters and you just want to tear up the world and you love global warming, sorry, I'm making someone mad, you can now write off 100% of the purchase price in the first year. Okay, did you guys all hear that? I know someone just fell off their chair. Don't drive off to the side of the road. You can write off 100% of your SUV or truck, assuming it's 100% business, and presuming that you've got enough income that you need the write-off. Again, if you're making $2,000 selling crap on Etsy, I'm not going to write off a $50,000 SUV. But the point is, if you've got a big enough business and it's 100% business, you could write off 100% of the vehicle purchase price on day one. Is that insane? Now, if it's 80% business, I can write off 80% of it. Pretty cool, right? Well, it gets better. Now, the new rule says if you buy any truck, RV, or van that weighs more than 6,000 pounds, it is unlimited write-off. It's called bonus depreciation. And what's cool about this bonus depreciation unlimited? It can be new or used. You can go out and buy a used car, truck, van, SUV, right? Do you know I had a phone call today? And here's a little tip. This was a phone call from one of the staff in my office. She owns an RV. She just drove it last year. It was her 2-week vacation. They drove it across the country and back. And now they're renting out their RV. They bought an RV and they're renting it like an Airbnb or VRBO. There's services that do this. She's renting out her RV. Now she can write off 100% of her RV, fuel repairs and maintenance, and she can use it a certain number of days out of the year and still write off 100% of her RV, and she's making money on renting her RV. Is that insane? Boom. That's the new vehicle law. Guys, this is serious. All right, let's do Q&A, baby. That's it. You can do mileage, you can do actual. I want to just tear this up for another 10 minutes or so. I'm all yours, and I'm going to tell you right now, if you share this video, whatever, share it on Facebook or YouTube, what else to do? I don't know social media as well as I should. If you share it, Rosalie in the morning is going to do a quick drawing of anybody that shares this video, and she's going to have me sign it, my tax and legal playbook, and published by Entrepreneur Magazine, who I freaking love. And we're going to give this away with free shipping, and I'll just send it to you. We should do a financial freedom book too. Here, Nancy, grab me a financial freedom. Let's do it. Okay, so I'm going to give away 2 books. Let's do it. This is my newest book, The Business Owner's Guide to Financial Freedom, published also by Entrepreneur, who I love. Send this out as well. So we're going to raffle off 2 books in the morning. Just share this. Just share it. Say, hey, this freaking video of Mark's rocked. If you're a small business owner, you need to watch it. All right, Nance, next question.
You probably already answered Ron's question, but he says, if I have an RV and I travel around the country exploring but do business, do I get a write-off?
Okay. Now, Ron brings up the RV deduction, and I've got a lot of RV followers. I want to give a shout out to Steve and Cooper at RV Inspection Connection in Texas and Work Camper in Arkansas. I speak at their conference every year. I love you RV owners. RV world, guys. There's this whole other subculture out there of RV owners that want to write off their RV. Let's talk about it. First, you can no longer write off your RV as a second home. Under the Tax Cuts and Jobs Act, you cannot write off the interest. It is not a write-off at all. Sorry. But if you're a business owner and you use your RV for business, you've got to ask yourself, are you a part-time RV owner or are you a full-time RV owner? Do you know I have clients that literally sell their home, hit the open road in their RV, and they work around the country at the Amazon warehouses, they work at national parks, they run their small business from their RV and live full-time in an RV. So if Ron is saying that he is a full RV owner, that's where he lives in his RV, the RV is not going to be tax deductible as a business vehicle because you live in it. But I'm going to take mileage everywhere you go. And the beauty is, Ron, you have to choose, you get to choose a state as your domicile that has no state tax. So I'm going to choose one of 9 states. Dylan, grab me that piece of paper on the wall that says 9 states. I want you to write off your, let me say it this way. You're not going to write off your RV. Ron is going to choose what state he's a resident of, right? Isn't this cool? If you live in your RV full time, can't you say you live in a state that has no state tax? Now, since I'm on the camera, it's sometimes hard to do this by memory, but I'm going to try and do it, then I'll choose this. You can make your state Washington, Nevada, South Dakota, Wyoming, Texas, Florida, Alaska, New Hampshire, Tennessee, and did I get Nevada in there? All right. Those are the 9 states that have no state tax. So if you own your RV, in your full-time RV, you get to choose a domicile where you don't pay state tax, but it's mileage for your RV. Now, for those of you that are using your RV for business, you've got a sticks and bricks home. So wherever your home is, you're just using the RV to drive around and do business. I have clients that go to trade shows. They go work on their rental properties, construction. The RV can be 100% write-off or whatever percentage it is that you use it for business. And you can write it off, Ron. I've got lots of articles on this. I love the RV ownership. Let's move on. Next question.
I'm a little concerned about Edwin because he says, I've already done my taxes. Are you able to redo them for him?
Edwin, one of our followers today, says, I've already done my taxes for 2018. Can you do them over? Yes, we would call it an amended 2018 tax return. If you want to check out our accounting firm, we'd love to be of service if you need it. This is not an infomercial, so I'm just going to put it up quick. You go to ke-cpas.com. ke-cpas.com. That's Kohler and Iyer, CPAs.com. We can do your tax return, we can amend it, and we can go from there. Now, also, for those that want to track their mileage, let me throw this out too. Some of the apps out there are really good to track mileage. I like the Deductor app, and I private labeled it for me. It's cheaper on my website than on the App Store. But you can go to markjkohler.com, sign up for my newsletter, and every week I've got a little link out there for my Deductor app. So if you go to markjkohler.com, I have a free newsletter too, and we've got an app that you can track your mileage via satellite, whatever. Next question. Okay.
Jared says, how can employees have more write-offs?
Oh, Jarrett. Jarrett. He says, how can employees have more write-offs? Okay, this is my chance. Jarrett threw me a freaking softball. So if I'm up here, I'm going to freaking hit this. Guys, if you're an employee, you got your W-2, you give some money to your church, you got your mortgage interest, maybe you can itemize, I don't know, plug it into TurboTax, you're screwed. You have got to have a small business on the side. Jarrett, give me something to work with. This auto deduction strategy does you nothing unless you have a small business on the side. Find out what you're passionate about. Sell something on the web. Start a service business. Start doing a real estate project. Own a rental property. That's a small business. I would love you to have a rental property on the side. So Jarrett, follow me. Get to my website. Get my newsletter. Follow my podcast. I'm out there trying to spread the good word that having a small business is the way to build wealth, create more cash flow, and save taxes. Get out there. All right, next question.
Now, Quentin says he drove for Lyft, made about 500 bucks. Should he still file taxes on it, or is it not worth it?
Okay, so first name?
Quentin.
Quentin says he drove for Lyft and made 500 bucks. Sounds like he did it for a little bit and didn't like it too much. What is that, about 10 drives, maybe 20? That's cool. Guys, if you sell anything on eBay, on Etsy, you're gonna get usually a PayPal 1099. If you sell for drive for Lyft or Uber and only make 500 bucks, you're probably gonna get a 1099. Now, since it's under $600, they may not 1099 you, but if I was Lyft or Uber, they're probably gonna 1099 everybody. So what that means is the IRS knows that he made money at Lyft. So he's gotta report it. And dude, we're gonna write off your cell phone and your mileage. You're not gonna pay tax on it. In fact, you're gonna save some taxes. Because just like I said, Jarrett, he's got a small business. He's driving for Lyft. That's a small business. So now I can deduct his cell phone, his home office, and mileage when he was driving for Lyft. So he's gonna have a loss that's gonna offset his W-2 that's gonna say refund. All right, next question.
D says, can I buy a used truck for my lawn care business and write it off?
Okay, this is a question was from who?
D.
D says, can I buy a truck for my lawn care business and write it off? Now this is a technical term, pay attention. Freak yeah. Okay, that is the rule. Oh my gosh, you can freaking write off your truck because you have a landscaping business. And the more money you make in the landscaping business, the faster I'm gonna write that freaking truck off. I might do actual, I might do mileage. I'm gonna look at how much money you're making. And I don't care if it's new or used. I can go either way, actual or mileage. Good job, D. Love it. Love my landscapers. Little shout out to Tony Bass and his crew. Tony Bass doing an event every year in Kentucky. I love him. I want to get to his event every year. He goes to the National Association Convention for all of the landscapers in America, and he teaches you how to make more money. He freaking rocks. Get over to tonybass.com and superlawn.com. Freaking rock. Google him, Tony Bass. Yeah.
Last question. It might be a big one. Elizabeth's throwing out kind of a question, not questioning you, but she says, I thought you could write off 100% in 2017 under qualified business depreciation.
Okay, Elizabeth, she said, I thought in 2017, she said in 2017, I thought you could write off 100% of your vehicle as a qualified business deduction. Now, Elizabeth, you might have some of your terminology off. As a CPA, and I teach classes to other CPAs around the country and read every article in the world and the new tax law. I took it to bed for about 6 months. I've never heard of that. I've never heard that you could write off 100% of your vehicle, first of all. Number two, I don't know what a qualified business depreciation is. I've never heard of that. Now, in 2018, depending on in 2019 now, both of these years, and up until 2022, depending on the cost of the car, I might get close to 100%. If it's an SUV or truck, you might be thinking about bonus depreciation. And bonus depreciation did exist in 2017, but you couldn't write off 100% of a car. I don't know what type of truck or vehicle you had. So Elizabeth, do your research. It's a little concerning because you probably already filed your 2017 return. Okay, we're going to take a couple more questions. I'm here for you. What do we got, Nance? Anything else? Okay.
Too many.
Okay, too many questions. Give me a fast one. All right. What I want to do here is just say.
I'm sorry about that. What exactly can a truck driver write off? A truck driver drives a truck for a living.
Okay, we got a truck driver. A truck driver, it's going to depend. Are you a contractor or do you own your rig? If you own your rig, you're going to write it off up to 100% bonus depreciation. You're going to generally go with actual. You're going to get a lot better write-off because it's an expensive deal. Writing off trucks, we have several trucking company clients, and my partner Liddell Iyer is the expert on trucking. And so I would just make sure you're talking with your CPA. Now, again, if you don't own the truck, you're not writing off anything. The owner of the truck, if you're a truck driver, gets to write off the truck. So this is owner-operator, and that may be our guy there. So make sure you talk with your accountant about the best method. Generally, you're going to go actual and take as much bonus depreciation you can. One last question, Nance?
It says, can I write off my car? I use it. if I use it for the business when I'm not driving my truck?
Okay, so final question was, Mark, I've got multiple vehicles. I've got a car, I've got a truck. I drive one for business one day, I drive the other one for personal one day. I drive this one for business one day and a car for personal one day. You're gonna add up your total miles for both vehicles that were used for business. And I'm gonna take 58 cents a mile. Now, if you use one vehicle for 50% or more in your business, then I can depreciate it and I can go actual. You really cannot do actual unless you use it at least 50% or more. All right, bottom line again, if you share this video, we're gonna we're gonna raffle off 2 books. And finally, please get over to markjkohler.com, sign up for my newsletter. And if you email me, mark@markjkohler.com, and put in the subject line vehicle, I will send you a very extensive blog article on how to write off your auto this year. I love you guys. I'll see you next week for another. And if you put a little, check the box on YouTube so you get a ping every time I shoot a new video. And when I go Facebook Live, you're gonna get a ping as well. And give me a little like on those YouTube videos. Get over to YouTube. If you're on Facebook, get over to YouTube and type Mark Kohler Auto. Got some videos there too. Thanks everybody. Have an awesome day.